Silver's massive move higher, says fund manager.
Who's actually owning your Bitcoin? Who's controlling your wallet? Your gold you can actually have in your own pocket. You can actually take it out of a system. It's not electronically. If tomorrow morning, the grid goes down, you still own it. And it's been probably a safety aspect for, as long as history actually has been happening. And so I think there's a fair chance that actually history repeats itself to a certain degree. And it's acceptable, particularly now in this larger brick settlement structure, where it actually becomes a very important saving tool. Yeah. And all these participants have a huge chunk of it. So putting it to work to actually have a security in balancing or rebalancing your trade balances is actually the key issue on that.
And it has a monetary function in that respect when you're talking about gold. So how does this extrapolate out, because not everyone wants to invest for those same reasons into gold. Is silver going to catch those tailwinds? Are the other precious metals in the basket going to catch those tailwinds? Or is it specifically in your view that it's gold where you should be positioning?
From a central bank point of view, it's going to be gold because it's the only thing which is big enough to actually change the structure of a big asset allocator. A larger fund could actually clear tomorrow morning the silver pool, right? And if you look at the LME, basically, the LME has what for most metals, 2 days delivery. Who wants to deal with somebody who's got 2 days delivery function? So you're actually going to see that the market becomes much more physical, and that means actually all commodities actually look good, particularly silver, which actually is trading historically on such a beaten down level in an environment where it's been in backwardation for as long as I can see. I think it's going to be ready for a massive move as it starts finding interest.
Backwardation occurs when the futures price of a commodity is lower than its market price today. Backwardation does not happen very frequently, and when it does, it usually doesn't last long. On a graph with price plotted on the vertical axis and time on the horizontal, the slope goes down when backwardation occurs. Backwardation usually follows an unexpected or disaster scenario, such as a hurricane wiping out a big part of the orange crop or a crude oil crisis limiting the supply of oil. Demand for these commodities increases in such events, causing their spot price to rise above the futures price. The opposite of backwardation is contango, which is when the futures price is higher than the expected spot price. Investors are frequently willing to pay more for a commodity in the future to avoid carry costs, such as storing the commodity. In backwardation, the immediate need to own the commodity outweighs the cost to carry it. Noted economist John Maynard Keynes called backwardation in futures markets normal. That's because he believed backwardation was not a random event, but a movement that's consistent with prevailing market conditions. A market in backwardation is bearish. Investors expect trade prices to decrease.
So some key takeaways of backwardation. Backwardation is when the current price of an underlying asset is higher than prices trading in the futures market. It can occur as a result of high demand for an asset currently than the contracts maturing in the coming months through the futures market. And traders use backwardation to make a profit by selling short at the current price, buying at the lower futures price. Now, how will this impact the metals and silver? Well, let's just cut to a clip from Khan Academy.
If a commodities trader tells you that a market is in backwardation, they're essentially saying that it costs more to buy whatever commodity they're talking about now. So now it costs more than it would to buy it later, to go into a futures contract to buy that, whatever that commodity might be, silver, gold, or oil, to buy it later. So later is cheaper, So the question you might ask yourself, or that really any trader might ask themselves, is this bullish or is this bearish? Is this a bullish situation? And there's no obvious rule of thumb here, but if someone says, look, to get something now costs more than to get it later, what does that tell you about what's happening in the market? Well, it tells you that people are desperate. So they are desperate, because if they weren't desperate, the rational thing to do would just be wait a little while and get it cheaper for later. Or if you don't need that oil right now, or if you don't need that corn right now, or if you don't need that gold right now, instead of paying more for it right now, just say, look, I could enter into a futures contract for delivery of that gold or oil or corn or whatever it is at a later date for a cheaper price. And I wouldn't even have to store it between now and then. So if people were rational and if they weren't desperate, this wouldn't happen. But because they're willing to do this, they're willing to pay more now than for a future delivery date, it shows you that there might be some type of, it tells you that there might be some type of shortage. In the case of oil, maybe the oil supply has been disrupted somehow. In the case of corn, for whatever reason, some crops have been destroyed and people need to eat and all of the rest. For commodities that aren't used, so to speak, like gold, if you see backwardation there, I wouldn't say, I mean, it's definitely still desperation, but it's not out of a core need. If gold goes into backwardation, it's more because of some type of irrational desire to have their hands on the gold now than have their hands on the gold later. Maybe they think society is going to collapse and the future delivery dates of gold aren't going to actually hold up. Who knows what they are? So in general, when people talk about backwardation, because of this desperation in the market, people tend to perceive it as a bullish signal. Obviously, if people are desperate, there's demand for this thing. My argument is you can't just look at one tea leaf out of a bunch of tea leaves and say whether it's bullish or bearish. But what you could say is, look, there's something somewhat abnormal going on in the market due to some type of desperation. It's a little less irrational if it's due to a storage, but it could be very irrational if it's due to just wanting your hands on it. Because frankly, if you wanted to buy gold just for the sake of investing in gold, you're not going to eat it or use it to fuel your car or anything like that, it would make complete sense, or even better, if you already held gold in this type of a market that's undergoing backwardation, the rational thing to do would be to sell your gold now for more money and then agree to sell it and agree to buy it back later for cheaper. And so once this later date comes about, you'll still have your gold and you would have made some risk-free profits.
So if you have a look at the silver price over the last 6 months, it's been steadily edging up. And you can see in the last week, it's been pretty much trading sideways. So question is, which way is it about to go? Is it about to move higher? Is it about to move lower? And what does backwardation mean for the silver market? Well, let's cut to a clip with Andrew Maguire.
Now, Andrew, we've had a ton of questions, a lot of questions about the very strange, can I call it strange, action in the silver area here. Can you just share some insights with our community? What is happening with silver?
Yeah, Shane. Now, yes, let's have a look. Silver is non-NSFR compliant. So that is the big clue here. So naked short momentums can take a bigger load, they can run it, and the insiders much less to worry about. But they were tricked into driving silver futures all the way back to the 7th of November, 2022. They breached $20. They got to 19,955, which was actually the rally point, the exact rally point in November 2022 when we saw silver start to rally from that level. So they've closed the gap. And in the process, they drove the 1 month silver forward curve. Now, this is really important from a technical perspective, and I know the technical guys will understand the impact of this. The 1 month forward curve, they drove it into unprecedented backwardations, telegraphing that a turnaround is imminent. Now, very short term, momentums have still not worked out. They're going to be wrong at this side of the sell-off, so they've continued to double down, to sell on every move higher above $21 spot. But the forward curve tells us they will lose momentum and move to cover off naked shorts before the insiders beat them to it. Also, silver futures open interest on the COMEX is ebbing, reaching new record lows recently as liquidity flows out of this LBMA CME ring fence, making it probably a little bit more difficult. And look, gold will drag momentum cap silver futures higher. I mean, goodness me, 90-to-1 ratio has reached actionable extremes by anybody's reckoning. And there's so little doubt that insiders are long silver futures into this deeply offside synthetic trade. And under the smoke and mirrors algo-driven action, spot silver is in strong Indian demand, and at sub $21, commercial COT resistance, this is the insider resistance, is currently, it's at 24. So really, they don't really have any incentive to keep it below 24 other than to scoop what we're doing now, which is what you're doing, is grabbing silver, physical silver at a discount. But the option structure for these commercial insiders show that they're betting on a much higher price into the end of the second quarter. I mean, significantly higher. And aside from holding medium and long-term positions long, we bide our time. Look for these higher probability stair steps to come. Then we will add more. And this will be activated as soon as momentum supply is overridden by insiders forced to add longs to hedge physical exposure into this extremely oversold gold and silver futures conditions.
So what do I think this all means for the silver price, and will it break its all-time high of $50? Well, last week I was at a private luncheon with a publicly listed silver company, and in a private conversation I had with the boss of that company, mentioned that their major shareholder, who is a big fund manager in the UK, where they manage money for both private and institutional investors, and they have a parent company which is huge. Well, anyway, this is a $1 billion silver fund, and they've invested in this company. Well, that fund told the boss of this publicly listed silver company that they're invested in silver because they believe silver is heading to triple digits. But they said to him, look, tell your Australian audience, look, want to be conservative, go $70. And this company has been researching the silver market in particular on a very detailed basis since the 1960s. And well, you guys know that I've been saying for some time that ultimately I do see silver hitting triple digits. I agree with Keith Neumeyer. So, but before we get that, we got to break the $30 mark. We got to then break the all-time high of $50, obviously, on our way to triple-digit silver. So there you go. There's a big fund in the UK that has a $1 billion silver fund, and they believe that silver is going to triple digits. Anyway, guys, what do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. Take care, everyone, and I'll see you all again on another episode of Finance Uncut. And just a reminder, the information provided in this video is for education and entertainment purposes only. Nothing on this channel constitutes as financial advice. The information in this presentation is no substitute for financial advice, and all investors should seek advice from a licensed financial advisor having regard to your own objectives, financial situation, and needs.